Europe, once a global powerhouse in economics and politics, now faces daunting challenges that threaten its stability and influence. From internal political turbulence to economic stagnation and technological lags, the continent is at a crossroads. France and Germany, historically the pillars of the European Union, are struggling to address these multifaceted problems. This analysis delves into the political instability, economic stagnation, and technological shortcomings confronting Europe and assesses its potential for maintaining relevance in the global economy. France, the EU's second-largest economy, is grappling with significant political and economic challenges. Political unrest has intensified, with protests and strikes reflecting widespread dissatisfaction among citizens. This instability is compounded by the government's struggle to chart a clear economic path. President Emmanuel Macron has acknowledged these difficulties, warning that adhering to outdated economic policies could lead France to economic irrelevance. Traditional industries and antiquated machinery, once the backbone of the French economy, are failing to compete with the technological advancements embraced by global competitors like the United States and China. The gilets jaunes, or yellow vests movement, which began as a protest against fuel taxes, has evolved into a broader expression of frustration with economic inequality and government policies. Macron's proposed reforms to the pension system and labor laws have been met with resistance, reflecting the difficulty of implementing structural changes in a politically charged environment. France's public debt and budget deficits further exacerbate its economic woes. Despite efforts to implement reforms, slow growth and declining investor confidence cast a shadow over the country's future. The broader EU economy depends heavily on France's stability, and its struggles send ripples across the continent. Without addressing these challenges, France risks losing its influence as one of the key drivers of European integration. Germany, the EU's largest economy, is also facing mounting pressures. Its automotive sector, a cornerstone of the nation's industrial might, is struggling to transition to electric vehicles and other green technologies. Companies like Volkswagen, which once symbolized German engineering excellence, are falling behind innovative competitors such as Tesla and Chinese automakers. The energy crisis stemming from the war in Ukraine has further complicated matters. Germany's reliance on Russian gas exposed vulnerabilities in its energy infrastructure, leading to higher production costs and reduced competitiveness. The government's efforts to diversify energy sources and accelerate the transition to renewables have faced logistical and financial hurdles. Additionally, Germany's demographic challenges, including an aging workforce, compound its economic difficulties. The country's labor market is struggling to attract skilled workers needed to drive innovation and maintain its industrial edge. This has led to calls for increased immigration and education reforms to prepare the next generation for a rapidly evolving economy. Germany's economic slowdown has implications beyond its borders. As the primary driver of the EU economy, its struggles weaken the Union's overall economic resilience. Addressing these challenges will require coordinated efforts to reinvigorate innovation and productivity while ensuring energy security and sustainability. Europe's inability to keep pace with technological advancements further compounds its economic challenges. The continent lags behind in critical areas such as artificial intelligence, renewable energy, and semiconductor production. While the United States and China lead in these fields, Europe struggles to create tech giants comparable to Google, Apple, or Huawei. The European Innovation Scoreboard highlights disparities among member states, with countries like Denmark and Sweden excelling in digital transformation while others lag behind. This uneven progress undermines the EU's collective potential to compete globally. Fragmented capital markets and bureaucratic hurdles deter startups and discourage investment in high-risk, high-reward ventures. The EU's General Data Protection Regulation, or GDPR, while groundbreaking in its emphasis on data privacy, has inadvertently created barriers for tech companies operating in Europe. Critics argue that overly restrictive regulations stifle innovation and limit the ability of European firms to scale globally. A more balanced approach to regulation is needed to foster a competitive digital ecosystem. Despite these challenges, there are areas of promise. Europe's emphasis on ethical AI and sustainability positions it as a leader in responsible technology development. However, translating these values into economic success requires greater investment in research and development and closer collaboration between public and private sectors. If Europe fails to address its economic and technological challenges, its global influence could diminish significantly. Projections suggest that by 2050, Europe's share of the global economy could shrink to less than 1/10. This decline would weaken its ability to shape international policies on critical issues such as trade, data protection, and climate change. The growing GDP gap between Europe and the United States underscores the urgency for reform. Structural issues such as an aging workforce and low productivity growth exacerbate the problem. Without significant investment in innovation and education, Europe risks being sidelined in shaping the rules that govern the global marketplace. Furthermore, the geopolitical landscape is shifting. The United States and China are increasingly asserting their dominance in international institutions, leaving Europe struggling to assert its relevance. Initiatives like the Belt and Road Initiative and the US-China tech rivalry highlight the importance of economic power in shaping global dynamics. Europe must act decisively to maintain its seat at the table. Despite these challenges, Europe possesses strengths that can be leveraged to regain its competitive edge. High-quality manufacturing, particularly in specialized sectors like aerospace and industrial robotics, remains a stronghold. Companies such as Airbus and Siemens exemplify the potential of European innovation when resources are effectively focused. To reclaim its position, Europe must prioritize investment in research, education, and infrastructure. Policymakers should foster a more conducive environment for startups and reduce bureaucratic hurdles. Implementing a unified digital market and increasing venture capital investment are crucial steps toward bridging the technological gap with global competitors. Mario Draghi, the former president of the European Central Bank, has emphasized the need for bold action. He argues that the EU must invest hundreds of billions of euros annually to remain competitive. This includes fostering a culture of entrepreneurship, embracing digital transformation, and creating conditions that allow businesses to scale globally. The Green Deal and the Digital Compass initiatives provide frameworks for addressing these challenges. However, their success depends on effective implementation and widespread support from member states. A unified approach is essential to overcome fragmentation and ensure long-term prosperity. Looking at the success stories of the United States and China can provide valuable insights for Europe. The US excels in fostering innovation through a robust startup ecosystem, well-developed capital markets, and a culture of risk-taking. Meanwhile, China's focus on long-term planning and significant investment in infrastructure and technology has enabled it to rapidly close the gap with advanced economies. Europe can learn from these models by adopting policies that encourage innovation, streamline regulations, and enhance access to funding for tech startups. Additionally, greater collaboration among EU member states is essential to overcoming the fragmentation that undermines collective progress. China's state-led investment in AI and renewables and the US's dynamic venture capital market demonstrate the importance of aligning national strategies with emerging global trends. Europe must find its unique approach, balancing regulation with flexibility to remain competitive while preserving its values. Europe stands at a pivotal moment in its history. To avoid falling further behind, the continent must embrace change, modernize its industries, and invest in its future. The challenges are immense, but with decisive action and a focus on innovation, Europe can reclaim its position as a global leader. The road ahead will not be easy, but the stakes are too high to ignore. Europe's ability to adapt and evolve will determine its role in shaping the future of the global economy. What do you think? Can Europe turn the tide and regain its competitive edge? Share your thoughts in the comments below, and don't forget to like, subscribe, and hit the notification bell for more insights into global economics. See you in the next video.